Hello guys. We'll be discussing a Alus FX strategy, guys. We'll be discussing Alus FX strategy as promised. So we're gonna be starting with part one of the strategy. So part one of our strategy, guys, will be only concentrating on the movement of the market. How does the market move? Like we want to concentrate on trying to figure out like the impulsive and the correction phase of the market. So that is going to be the first part of our strategy. Okay, so we're just gonna make simple drawings just for explanation purposes. Okay guys, so these are the three kinds of the trends that we would actually have in a market. These are the only three things structure that we could actually come across when we are trading the first market. So the first one is a downtrend. This is how the downtrend looks like, which is creating the lower lows, lower highs, lower lows, lower highs, lower lows, and then this one being the uptrend, which is creating higher highs, higher lows, higher high, higher lows, higher high. And then we have the ranging market, which creates the equal highs. So these are the equal highs that the market creates, and these are the equals lows that the market creates. So we can't specifically tell if the market is going up or it's going down. But the more we dive deeper, we will see that sometimes the market corrects this way. Find that the market is going up and then it corrects, and then it end up shooting up most of the time. But now we will get to that point of a strategy. That is a strategy. But for now, we just want to understand how does the market actually moves. Okay, so that's what we're going to concentrate on. So I just want to explain this first, that this is just a normal movement of any time frame you could come across with. This is how the market moves. The market gives you an impulsive move, and then it corrects, and then it gives you impulse, correct, impulse. Even on an uptrend, impulse, correct, impulse, correct, impulse. So what I want you to understand, I want you to understand that which are the impulsive move in a downtrend and which are the impulsive move in an uptrend, because the market, for you to be able to, if you're going to be trading a continuation patterns, you can only trade on the impulsive phase. We use different kinds of strategies to trade. There are people who use reversal patterns, which those are the people that they would want this trend to end first, and then they take a buy which goes against the trend. So that's a reversal pattern. After the market is done with the downtrend, they want to reverse with it and take a buy. Even on this one, reversal people try a strategy. They'll be like, if this uptrend is the end of it, they want to go down with the downtrend. But the strategy that I'm going to be teaching you, it is a continuation pattern. We're going to be dealing with the continuation pattern. So with the continuation pattern, you first have to understand how does the market moves, how does an uptrend and a downtrend and the ranging market looks like, and which part of the downtrend we call them impulsive and which part we call them correction, which part we call them impulsive and which one we call them correction in an uptrend and in a downtrend. Okay, so there's something called that if the market break creates a lower low and it goes create a higher high. If the market breaks below that point, that previous lower low, creating the new lower low, that point where the market broke that point, we call it the break of structure. Okay, and then even in this case, it's a break of structure. Just like in this case, when the market does create a break of structure, it simply tells you it's a sign. Remember, all things that you see in the market, it's a sign or it's an indication of something. Okay, so if you do have a structure that looks like this, and then the market recently just created a break of structure, it simply means that the market is still in a continuation pattern toward the downside, meaning the market is still gonna go down when the market has created the break of structure. Just like in this case, if you're the reversal strategy, if you're the person who trades reversal patterns, you can't enter once the market has created the break of structure. So once you see the market creating a break of structure, therefore, which means people that have got good chances that they can trade in that particular trend, they are the people who trade the continuation patterns. Like us, in this case right now, we would be able to say the market might go and retest the previous high. We can simply say the market can come to this point. When it gets to this point, we do what? We sell, because that will be the continuation pattern. The continuation patterns are on the correction phase. Like in this case right now, we should be able to know that this is an impulsive correction. It's a continuation pattern for us, and an impulsive correction being the continuation pattern for us. And then just like that, you as well as a person who's trading continuation pattern, you want to see the market crossing the what? The break of structure. So once the market creates the break of structure, you're just going to have your support zone right here, and then you wait for the market to get to that zone so that you can be able to do what? To enter that trade. But we're still going to get into that, like how do we see that this is the best possible point, or that we need to take a trades, because the market, it's, you can't really predict. Sometimes it makes a 10 somewhere here, sometimes it makes a 10 year, sometimes it makes a 10 year, sometimes just make a 10 year and can carry on. So we need to be able to spot if the market is gonna 10 year, if the market is gonna 10 year, if the market is gonna 10 there on the double top before it goes down. I see. So those are the things that we're still going to talk about. But for now, we need to understand that when the market creates a break of structure, it simply means that it's still continuing in the direction of the trend. Okay, so we're gonna pass from that point, and then we go to, so this was it. Okay, so in an uptrend is the very same thing. When the market creates a high, higher low, higher low, high. Once the market breaks above this point, therefore, which means that is going to be your impulsive phase. The impulsive phase, you can only get it once the market breaks above your previous high. Therefore, you would know that, okay, that is a impulsive phase. So you're just gonna wait for the market to do what? To correct, retest the previous high, and then that is what we consider as the continuation pattern. So this is going to be our continuation pattern. Therefore, we're gonna try to enter this trade so that we can buy and move with this impulsive phase. Remember that we only buy to take the impulsive of the market. Even in this case, we only sell to be in the impulsive of the market. You don't want to be in a correction phase of the market based on a certain time frame, but we're still gonna look at it based on time frames. How does the higher time frame from a monthly, weekly affect the 4 hour, 2 hour, 1 hour, and even 15 minutes? Like the correlationship between those time frames, we're still gonna get to them. But for now, I want you guys to, excuse me, to understand the movement, the basic movement of the market. So this is how it moves. So these are the things, these are the signs that you need to look, or these are the indications that you need to look, that should influence your decision making. You see, once the market creates the break of structure like this, chances that you taking a sell, let's say for example, you're drawing the trend line like this, and then the market is currently here. Chances that you taking a sell to be like, hey, I'm taking this sell from this point right here all the way to the downside, they are very slim, because the moment the market breaks the what, the moment the market moved to the upside and caused the break of sharp, chances that the market is just going to correct and give you a new impulsive move, they are very high. So hence I'm trying to make you understand that the structure itself, it can have an influence in the certain decision that you want to take. So hence I'm saying, like, you need to consider the structure first before your strategy. Your strategy needs to come after. Okay, so you need to understand the movement of the trend first before you can think of any size of the movement of the market. Okay, so these are the two things that I wanted you to talk about. For now, it's a continuation pattern, and then for now this is a just equal high. So this one is, we're not gonna really talk much about it, because for so far we're only concentrating on the continuation pattern in the impulsive. So just to highlight the point that I want you to understand, that We only trade the market when it's here in these points. These are the only impulsive part of the market. These. So other than that, you do not trade anything which is not an impulsive in this case. See. So these are the impulsive phase of the market. These ones right here, and then this one not highlighted, they are the correction phases. So this is where we want to enter the trades, because if the market gives an impulsive, you wait for the correction to happen so that you can be able to do what, so that you can be able to enter and go all the way down to the downside. So these are the things that you want to see. You see, so these are the things that you want to see as a trader. You go with the trend. Once the market causes the break of structure, definitely you know that when it gets to this point, this is where you're going to take your selling opportunities and then you go down with it. So this is how we do things. Continuation pattern. You see. So this is how we do things. You see. So even in an uptrend, once the market causes the break of structure, you know that the next time the market gets to that point again, you take you take the trade, because that's where you'll be expecting the correction to end, like here. And then also when the market gets to this point, because there was a break of structure, you wait for the market to come, retest that previous high, and then go. So this is just the basic movement of the market. So this is just the basic movement of the market that I need you guys to understand, that you can't be thinking of taking a buy maybe from this point, saying, okay, I'm going to buy all the way to that point, whichever way, if you still see the break of structure. Okay, so we can't do such trades if we still see the break of structure. Okay, so that is what I wanted to explain. This is just a continuation, simple, basic thing of the market. So now we're gonna be going to the reversal. How then do you enter, or how then do you become skeptical that now the market might be reversing? How? Because if you are trading continuation patterns, there's another sign for you that you need to look for, that is going to be indicating that now the market might be taking a reversal pattern. So you must be careful. You would still continue taking sells in a downtrend, or you taking buys in an uptrend, because the market has just indicated the sign or the sign that the market might be reversing. So this was the continuation pattern. Keep note of that, and then we're gonna go to correction phase. I mean the reversal pattern right now, or the reversal indication or reversal sign that the market is about to change direction. Okay guys, so now we were talking about the continuation patterns of the market. So now we're going to be talking about the reversal pattern, or how do you spot, or what indicates that the market is about to change the direction. So we just spoke about this break of structure, that when you see a break of structure, you then actually know that the market is actually going to the downside. When you see the break of structure right here, you just know that the market is still gonna go toward the downside. But the moment you start seeing the market failing to break below this point, you see this was the last low of the market. This was the last low of the market. So we were expecting the market to do what? To break below this point. But the market did what? The market failed to break above this point, and then decided to come break above this strong point, because the lower highs in downtrend, we consider them as the strong points. This point, this side, we consider them as the strong point. So the moment the market breaks above one of these points right here, which means now the market has broken above the strongest point. Therefore, this is the sign, or this is the indication that the market it's no longer gonna be going it's not gonna be going towards the downside. Like in this case, as you can see, Uguti, the market might be coming forward for a neckline retest or something. It can come all the way down to retest this previous high and start to be going up. So what do we call this? We call this the change of character when the market breaks above the previous high, which we call that chalk, something like this, which we call it the change of character. Even in this side, sometimes it does, the market still does create a have a lower low, lower high, lower low, lower high, and still breaks below this previous point. Okay, so at that moment you would be looking, when the market causes the break of structure, you would be looking for selling opportunities somewhere at this point, somewhere within this line, to say the market should be go down. But if the market doesn't give you any reversal patterns within this correction phase, and then it goes all the way to break above this point right here, which it's also caused the what, also called the change of character, therefore, which means the market, it is now giving you the signs that now it's no longer be gonna be going towards where, towards the downside, the market will be going towards the upside. So these are the signs that you need to look for. Okay, I need you to understand these basic things, because when you go to the actual chart to explain what we actually refer, what we actually talking about when we're talking about this, it's what. Okay, so this is the indication of a what, of a downtrend. So we're gonna go into the indication of an uptrend. Okay, so this will be for the uptrend, the explanation for the uptrend, guys. So for the uptrend, as you can see, that when the market has the breakout structure, we automatically know that the market is gonna give us a correction, and it's gonna give us an impulsive again to the upside. It's the very same way when we have the correction like this, the market it's gonna correct, and it's gonna give you the impulse to break above that point. But the moment you see the market giving you a break of structure, giving you impulse, and then it corrects, but the new impulsive move doesn't move all the way to break above the previous high, and then it goes all the way to break below the strongest point. Therefore, that's when you know that the market has just caused what, the change of character. And then when the market gives you a change of character, it simply shows that the market now will be changing direction to the other side. I see, and then it's gonna give you something more like a double top. It's not always a double top. Sometimes it does not even reach this highest high, this highest point. It comes maybe reject, maybe distinct between 50 to 61.8% of the Fibonacci, and then it starts to go towards the downside. Sometimes it gives you a perfect the what, double top, of which sometimes the best entry for these things is going to be the retest of this neckline, and then the market starts to be going towards the downside. Yeah. But the most important thing that I want to talk about is that when the market breaks below this point, it gives you the change of character. This one again, the market sometimes it does give you those break-off structure towards the upside, break of structure towards the upside to come give you correction and then impulse again. But in this case, if you can see, the market gave you the break of structure, it created this higher high, but instead of it correcting a little bit to retest the previous high and then give you what, the new high, the market decided to do what, the market decided to take the move all the way to break below this point right here, of which then it just caused the what, the change of character. The moment you see something like this, then you need to understand that okay, the market has given you what, the sign or the indication to say now the market is going the other direction. Since when it was going up, now it's going to be going towards the downside. So these are the basic movement of the market. You see, before we could go to the any chart and analyze it, you need to first understand these simple basic stuff, because otherwise then you're going to be confused when you get to the actual chart. So this is going to be the part one of our strategy, guys. You having to understand these basic movements of the market. So the part two of this, we're going to be jumping into examples now of okay, how do we actually apply this kind of information to the actual chart. So this is going to be the first part of the graph, I mean of the strategy. This is part one. Alus effects, we out, guys. Part one.